I'm
Yes, sir.
audible,
Yes, sir.
right?
Yes, sir. Yes, sir.
Okay. Okay. Fine. So the last chapter we'll discuss today so that our balance sheet management will be completed today. So this is about IRAC norms or provisioning norms. So IRAC means income recognition and asset classification norms. This is called a and how to classify the asset. Firstly, asset classification. So asset means we are talking about the asset like it's a earning asset of us a lending or investment, whatever it may be. And according to that classification, the income which is generated from those things, how those incomes should be recognized as income means whether those incomes should be recognized and actually they qualify to be credited into the profit and loss account or not, according to that classification. So certain classifications are made. So, so out of those classification, one of the classification says that those assets income can be only treated as income and they would be credited to P&L account. Other classifications, interest will not be qualified for to be recognized as income, so they cannot be credited to P&L. So that is about the INC norms. And it also says that for all the asset, banks should start making provision. Provision means from your profit and loss account, some amount has to be set aside and that has to be kept in a separate account as a provision account. That is the two heads I'm telling. Now we'll understand how the assets are classified. So basically we know that banks assets are classified into two categories. One is called performing asset, another is called non-performing asset. So performing assets are called standard asset, means those are the assets who are actually generating income for the bank. That means a loan has been given. A loan has been given to a borrower and borrower is also paying his installment or repayment of the bank loan is done regularly. So when this regular repayment is there, when the regular repayment is there, then that asset is treated as a standard asset or performing asset. Means that asset is performing, still it is alive because repayment is done. A repayment means normally whenever the borrower is paying his principal, principal, principal as well as interest. Both principal portion of principal and portion of interest are being serviced. They are being serviced. They are being paid by the borrower. So in such cases, they are regular repayment. Those assets to be treated as standard and performing. But when this regular repayment is totally stopped, so repayments are not coming, they are stopped. That means those assets are non-performing. So in such cases, neither the principal nor the interest are being paid by the borrower. So in that case, they would be called non-performing. So basically that means only the income which is generated through this performing and standard asset, they are eligible to be shown in the profit and loss account. Means those income which is earned from this performing asset, performing loans, they will be credited into P&L account. The income from non-performing assets, since this is not service, so they are not eligible to be credited into P&L account. So RBI has told that such non-performing asset, you should stop applying interest. Stop applying interest because there is no point in applying interest as the borrower is not paying anything. So interest application should be stopped once the asset is turning non-performing from performing or from standard to NPA. That is the basis of this thing. Okay. Now, standard assets are also divided into three categories. So, standard assets means those assets which are generating income for the bank. They are also divided into three categories. This is because of the fact that to know the process under which category this asset belonging, so that in time the steps to be undertaken by the bank before it turns to NPA. So these are the symptoms shown by these assets before it is turning NPA. So these are the NPA is, say we can say that health is totally bad. This is NPA means the asset has reached a stage where there is a hospitalization is needed. So these are the stages before hospitalization. So these are the symptoms showing that little bit of something is happening to that standard asset. After this stage, it might even go worse. So hospitalization is needed. So SMA means if the asset shows, standard asset shows some irregularity, which stays for 30 days period. So for 30 days period, that irregularity persists. If that irregularity is rectified within that 30 days period, then it can be treated as standard or regular account. Again, it will be not treated under SMA. SMA means special mention account. Special mention account means there is a specialty here that something is wrong in the account. So that's why they are called special mention account. So SMA 0 is up to that irregularity is shown in the account up to 30 days period. If the irregularity still continues and that continues more than 30 days period, up to 60 days period, then that category should be identified as SMA1. And if it still continues and that continues is more than 61 days up to 90 days, then that will be falling under SMA2. So this is the stages SMA01, SMA1, SMA0, SMA1, SMA2. They will be the standard and regular, but for treatment of this special account so that they will not fall into further category that is called NPA. So within this, banks should take precaution or steps to revise this account to become regular, standard and regular. Okay, so that means beyond 90 days. So from 91st days, if the irregularity is still persisting, means the payment is not coming. The interest and principals, they are not coming. They are more than 91 days. So then they will be classified as NPA. Okay. Now, this NPA, when the account turns NPA, again they are divided into three categories. So that is, first it will turn into a substandard. So after SMA2, it will come to substandard. Then after some time, it will become doubtful. And third is loss. So first it will turn to a substandard, doubtful, then loss. So these are divided. What is the logic with dividing this or classifying this non-performing asset into substandard, doubtful, and loss asset? For the purpose that it is divided as per the time. So when the time gets older, normally these are the standard will turn to doubtful and doubtful may turn to loss. This is not only time, time plus another factor of, which is to be identified, and according to that substandard, doubtful and loss can be categorized. So time and amount of security available. So amount of security on the basis of time as well as amount of security available, they can be classified under substandard, doubtful and loss assets. And this is first thing. Second thing, the second main reason is that according to time, since it is passing by this one, so gradually, gradually the provisioning, provisioning amount, provisioning amount for each asset from substandard to doubtful to loss, project provisioning amount will gradually increase. So substandard a little bit less provision, doubtful more provision, loss 100% provision will be there. So this way the provision amount will gradually increase. So these are the two reasons for which the classification of non-performing asset is done. Okay. Now I'll let you know when some background of this, why these IRS norms are this non-performing assets classification and provisioning has been introduced. This was introduced from the 1st of April, 1st of April 1992. So entire NPA culture and provisioning culture in the bank started from 1st April 1992. Prior to this period, no such classification or no such provisioning was there in the bank. So there was nothing called NPA or nothing called provisioning of standard or this NPA. No NPA, no provision was there prior to this period. So from this it was introduced, and this was introduced on the recommendation of Mr. Narasimham Committee. Mr. Narasimham Committee, who had studied all these things for years together, and they proposed to the government, and Parliament finally passed this thing that this has to be enacted in our country. So Narasimha Committee proposed this. So this is basically one of the main things which has happened at the time of financial sector reform. Financial sector reform which was done during this period. During the early 90s, it started. All the financial sector was totally reformed. New changes was brought into the system. So sometimes it is asked under whose recommendation this IRSC norms and this provisioning norms have been introduced. So you can say it is under Narasimham Committee. And it is also asked that prior to this period, 1st April 92 period, which system was followed? If there was no NPA system, no provisioning system, what was the system which was followed? So you may say that there was a system called health code system. Health code system was followed. So what is that? I'll just let you know so that you can understand that. What is that health code? There was no provisioning. So only instead of that NPA thing, health code was assigned to the loans. So now as they are assigning this health code as standard and substandard and NPA. There are two health code now. Either it is a performing or standard or it is non-performing. But in earlier, since such things were not there, so the health code status was given. So health code was divided into 8 numbers. Number wise, the code was given. So from 1, 2, 3, 4, 5, 6, 7, 8. So 8 codes were given to the account. Whatever the loan account will be there. So according to that, you can see that what type of account it is there. So basically, 1 means everything is fine. Borrower is paying regularly. All the principal, interest and everything or CCOD account, it is totally regularly, it is working. So like this, up to 4. So now you see that SMA 0, I told you. So basically this is the SMA 0 and this is SMA 1 and this is SMA 2. So a little bit of irregularity is shown till this one. Now 5, 6, 7, 8, there was no NPA concept, but they were told that this is sick. This was identified as sick account and viable account. Sick and viable means sick account. Viable means it may be revived and it may be brought back to 4-3 or to 1 status or 1 status also. Then next was sick and but unviable means this is a stage where it is recovery is not possible at all. Most difficult for some. Then seventh is called totally unviable. Means these are unviable account. It cannot be treated as a regular account or it cannot be brought back to stage 4, 3 or 2 or 1. And 8 was the status given for any account where recovery is not possible. That is 7th stage it has come. But those account, since recovery is not, a bank is failed in all aspects and those account have been filed suit. So suit has been filed in those account in court of law for recovery. When suit has been filed, the status 8 is given. So this was the health code system which was followed earlier. Now it has been changed that you have to change that system. So now we are changing that system to standard and non-performing asset. And according to that, we have two standards are divided into 3 categories: SMA 0, SMA 1, SMA 2. And non-performing are divided into substandard, doubtful, and loss assets. Clear? So this is the basic thing we have learned about how the background is. Now we'll see that bank gives these loans to different types of customer according to different as per the facility which are offered. So classification of NPA also depend on the what type of facility, what type of credit facility is offered to the borrower. So to borrower, what type of loan we are giving. According to that, we have to decide when that loan has to be classified as NPA. Because we know that 90 days period. When this 90 days period is crossed, from 91st day, we have to classify that NPA. Just remember one thing that when this IRS norms and this NPA norms were introduced, first time when they introduced, this 90 days concept was 180 days. This was earlier 180 days. So around say 5 to 6 year period, the 180 days concept was there, means 6 months. Now it has been reduced to 90 days. So now currently it is for 90 days or almost 3 months only. So earlier it was given 180 days. This has been totally deleted. Now it is 90 days concept. Okay. So we have to see what type of credit facilities are offered, and according to that, when this 90 days concept will be applicable to such loans so that they can be classified as NPA. So basically, credit facilities offered by the bank can be in a fundamental way or major category. We can divide them into 2 categories. One is running type of account, and another is where this is not running type of account, where only after the total disbursement has happened, the repayment starts and repayment comes to the loan account through installments only. So repayment by installments. So these type of accounts are there. So basically running account means where continuous transactions happen. So borrower withdraws money as per the limit, and also after the sale, everything is done, they credits the proceeds into the account. So there is a plus or minus going on. So continuously, like a savings account, current account, we operate. Similarly, these accounts are operated. So cash credit, overdraft, packing credit, ad hoc cash credit or ad hoc OD, or credit card account. So basically, these are normally running account. So for them, how this 90 days period to be decided? What are those irregularities which continues for a period of 90 days, and on 91st day we have to classify them NPA. Same thing applicable for this type of repayment which is done through installment, like your crop loans, term loan, demand loan, bill purchase, bill discounted, bill negotiated. Whenever these bank guarantees are invoked, they become a loan. They become a term loan like thing. Similarly, when the LC is devolved, they become a loan. So those loans may be restructured loans, like a term loan, etc., which are restructured. Any derivative transaction which has been failed, the counterparty has not paid those things, so honored those things, so they also become a loan. So whenever they are loan, they are treated under this category. They are called repaid through installment. Normally, that's why you will see the head loans and advances. So we can say these are called advances and these are called loans, because loans are paid through installment. But advances are not normally paid through installment. There is a continuous process of withdrawal and deposit in the account. So we'll see that how these things are treated, how this CCOD and other things, and these are to be treated. For CCOD, other things, so if it is a running account, means it is a CCOD, PC, it's or credit card. Credit card is a little bit different, I will tell you. So like CCOD, PC, etc. In those cases, the 90 days period is considered that if such account remains out of order for 90 days and it crosses that 90 days period, then from 91st day, it will be treated as NPA. So for running account, this out of order status is important. I will let you, I will explain this out of order situation in detail. And in term loan and demand loan or bill, these are the second type of thing which are called loans. In such loans, interest and or installment together, they remain overdue. So here overdue status is important. Here out of order status, here overdue status. So when the overdue remains for 90 days and it crosses on 91st day, it will be NPA. And for bills, when the bills remain overdue, means it is not repaid. Bills are still, bank has given advance, it is not liquidated. So they become overdue for a period of over 90 days. That means on 91st day, they will be treated as NPA. Clear? Any question on this? Any doubt, please ask me. Otherwise, afterward you ask, I will not explain again.
Clear, sir.
Clear. Oh, fine. So only one person has agreed that she is clear.
Yeah, clear, sir.
Clear, sir.
Clear, sir.
Sir, clear, sir.
Okay, thank you. Unless you say
Sir,
yes,
previous
or no,
slide.
how I can understand. Okay.
Sir, previous slide you mentioned in term loan, agriculture loans, sir. Agriculture loans also cash credit, sir.
See, agriculture loan, if they are, they can be divided into two category again. Yes or no?
Yes, sir.
Agriculture loan, you can have a running account type also. You can have a loan account type also.
Yes, sir.
Yes or no?
Yes, sir. Yes, sir.
Sir.
CKCC can be also a running account. CKCC can be also a, or
Term loan
KCC
account.
account can be a running account. KCC account can be a term loan account also.
Okay.
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 So for them, a special treatment will be there for agriculture, but the status is same, out of order or overdue. I will come to that. Agriculture has got a special status. Okay. Now is it clear? I come to that. I'll come to that step by step by step. I am coming.
Okay, sir. Okay, sir.
So similarly, I have not explained credit card. I have explained everything. I have not explained credit card because credit card is totally separate. Like agriculture, credit card is how you are going to classify the credit card dues as a NPA, that is totally separate. So I will first explain now credit card, then I will go to those things. So first you understand that bank has to classify a loan account or a running account as NPA only if the interest which is charged in that account for that quarter, for a quarter is 3 months or 90 days period. This for a quarter period means 3 interest has been charged to the account, and for this quarter, this interest is not fully serviced. In the end of the quarter. That means you should understand that. See, quarter means this. Suppose normally interest is applied on these loans on the last day of the month. Suppose 31st of December, the interest has been charged. This interest has been charged. After that, January 31st, again interest will be charged. Then February 28th or 29th, whatever it is there. So again, this will be charged. So this interest which is charged on 31st December in any loan account, they should be recovered before 91st day. So when this 90 days is coming for this interest, 90 days is which day? 90 days is coming as which day? This is the, so we have
28th
January
February.
30. Huh?
Sorry.
How it is February?
And
So it
28
will
days in the
be 31st March. Is or no? 31st December, the interest has been charged. So first January, you have to start calculating 90 days. So 90 days, January, you have 31 days. February, suppose 28 days. Then March will be 31 days, so that it becomes 90. So till 31st March, the interest is supposed to be served. Interest means this interest to be served. Suppose this is interest charge is 100 rupees. So this 100 rupees, if it is paid within 31st March, then this account stays regular. Okay? Because this interest of say 110 rupees is supposed to be paid on 30th of April. Maybe it is 30th April or 1st May, whatever it may be, you calculate. And this will be payable on June. So this is due on the 1st of April. This date, 1st of April, is the due date for classifying this account as NPA. If 100 rupees is not served by 31st March, it will be turning to NPA. These two interests does not matter because they are due on 90 days from this date of charge. Is it clear to all of you?
So,
Okay, so this is the concept you should remember. So banks should classify an account NPA only if the interest charged during a quarter is not fully served. That means it is not that all 3 interests, because there is a date on which 90 days will be coming. So that 90 days concept starts from the first interest of the quarter. Second, third interest will be followed by from that day to 90 days. Then that to die. So that means this 100 rupees, if it is served within this period, then it is a regular. The borrower can pay all three interests, but the minimum is that this 100 rupees should be serviced by the borrower, so that his account qualifies to be in the regular or performing asset. Okay. Now, for credit card dues to be treated as NPA for that period. So first you understand that we know that in credit card there is also a limit under which the cardholder operates his cards. Within that limit, he has to spend the amount. Normally, credit cards will not allow him to overspend beyond this limit. And for that, the credit card always has a system which is called, for credit card, normally monthly billing system is followed. So for each credit card, there is a statement generation date, or we can call that the billing date. So on each month, a specific day, the statement is generated or bill is generated. Say for a credit card, 5th of every month is the billing date or statement generation date. It's like an electricity bill you are paying. So the person from electricity department, they will come and they will read your meter and they will give you the bill. And this bill amount to be, that means this is prior to 1 month period you have consumed the electricity. The bill is generated on 5th. You have to pay that within a due date. So here also same thing, a due date is there. For credit card also same thing. If 5th is the date of billing, that means from last, say 6th of October, or say we can say 5th of October, this is 5th of November. So 5th of October 2002 to 4th of November, whatever the uses are done during this period of 30 days, that will be billed on 5th November. And this amount to be paid by this due date. Suppose we can say that 25th November is the due date. So you are supposed to pay the amount within this date. But this credit card has got a facility called minimum amount due. Normally, whatever the amount you use, suppose you have used, say, 10,000 rupees. So here the bill will show that 10,000 rupees is billed to you. This amount is payable by this. But according to this minimum amount due, this is given by the card issuing authority that you can pay by installment. You are not able to pay the full amount. You can pay by paying the minimum amount due. So normally minimum amount due is the 5% of whatever the usage which has happened during the last. So 5% becomes 500 rupees. So if you pay 500 rupees within this time, then it is fine. The other things are how the interest will be charged, that is totally different. So we will not consider that. So minimum amount due is the amount which should be paid. And this is considered as an installment, which contains your principal plus interest. So you are paying the installment here. If the installments are paid regularly, then it becomes a performing credit card. But if this minimum amount due, which is the installment, if this is not paid, that 90 days concept will come, but here there is a little bit difference than the loan account we have treated that. So here the concept is that, so now 5th November is the due date. 5th November is the statement date. So from which date we will start calculating that 90 days period. So it says that if the minimum amount due is not paid within 90 days from the next statement date. So that 90 days concepts will start from 5th December. So it is not from the 5th November, because this is the due date within which you have to pay. You have failed this. So you have not paid. So 26th November will not be the starting date. It will start from the next billing date. So next billing date will be 5th December. So from this day, again 90 days period will be available to the cardholder. If he pays that minimum amount due, fine. If he does not pay, on 91st day, it will be turning NPA. Clear? So you tell me which one will be the 91st day. In this case, what will be the 91st day? 5th December means in December, 4 days has gone. So we have 27 days in December. In January, we have 31 days. So another 32 days is required. So 28 days in February and 4 days
March 5th, sir.
March. So there are 90 days. So 4th March means up to 4th March, this 90 days is there. So on 5th March 2023, it will be treated as NPA if that minimum amount due, which is written in the bill of this 5th November, is not paid. Clear? Because one question will come like this, where you have to find the on which date this credit card dues to be classified as NPA. So you have to calculate this. And another,
So the
RBI
billing
has
date
given
was
another
to be calculated,
condition.
sir. 5th
Another
March,
condition in
the 5th of December means the billing date also to be considered. From that date we have to take. Only 4 days we have to leave in December, sir.
yes, we are starting from 5th December. Na?
Okay.
The day one starts from the statement date, next statement date. So next statement date is 5th December. So from 5th December, you have to calculate 90 days. So I have calculated this 90 days from 5th December only. It falls 91st day is 5th March. Clear? Here example is 5th December is the statement day. Any date can be given in the question. So from that day, you have to start calculating. Is it, I am clear to you?
Yes, sir. Yes. Yes, sir. Clear.
Another condition has to be there. RBI has stipulated another condition that this calculation will be true if the gap between two statement days, they have told, instructed that this will be treated for classification NPA subject to fact that the gap between two statement dates. So the gap between 5th November, 5th December should not be more than 1 month. So that's why you will find that all the bills are generated by credit card issuers with the gap of 1 month only. It has not to be exceeding 1 month. If it exceeds 1 month, then normally it will be treated from the previous billing date. It is not from the next billing date. But normally it doesn't happen. Clear? That subject to thing you should remember, the gap between two statements should not be more than 1 month. That is the RBI circular. Okay? So credit card, there is no issue. Any issue if there with credit card, ask me now. Otherwise, I'll move to the next one.
Sir, 1 month means 30 days or 31st day?
See, I don't
As
know.
per RBI.
RBI circular says 1 month. That's all.
Okay.
1 month means, say, that's why every card issuer always bills on a fixed date of the month. 5th means 5th, 6th means 6th. If you are you having any credit card?
Yes, sir.
So which bank's credit card you are having?
Union Bank, sir.
So can you tell me whether your bill date is fixed or variable?
Sir, it's
Fixed, sir.
fixed.
Fixed.
Fixed, almost fixed. It might be variable. If there is a month of February comes, it might be the next day. But they maintain that 30 days period always. Okay, so monthly normally they maintain that 30 days period. So you will see that almost fourth. Sometimes in a year it might be fifth or third might be also possible. So that is possible. One day does not differ. So normally all other average you see that it will be fourth of that a month or sixth of a month or 10th of a month, whatever the date is. And due date also by same way due date is also fixed. Maybe 20th, 21st, 23rd, like that it will be there. So that is nothing. You should remember that this is the circular. Okay.
Sir, another thing,
Now
sir.
go to the
Sir, that 1 month after 90 days is there. That 90 days we have to calculate month wise. For example, 1 month is 31st, means 31st we have to take.
simple. You have to start calculating that 90 days from the next billing date.
Yes, sir. That 90 days
Billing
means
date only.
that 90
Next
days
billing
means
date, you tell me which is the next billing date.
5th of if it is billed at 5th November, then 5th December onwards.
Okay, 5th, you start calculating for 5th December. No, 5th November was the statement date where
Yes,
the amount was due. It was not paid by the due date in November. So
yes,
next billing date is 5th. So 5th December we are starting. That's all.
yes, sir.
So that is what I explained. What is more
Yes.
you are asking?
Nothing, sir, nothing. That one, sir.
Okay. So now this agriculture loans, they have got a speciality here. Here that 90 days is not the concept here. Because for agriculture loans, normally these loans are given, but agriculture people who actually doing the agriculture, they depend on the harvest season. The harvest season, after the harvest season is done, harvesting of the crop is done, they will sell the crop and then the money will be received by them. So from that money, they will repay the loan. So since the harvest for crops are taking a longer period, so for them a special logic has been given or special time has been given. So basically, this is the agriculture loans are divided maybe when they are the crop loans. Other than crop loans, it is not to be treated. So basically, when they are crop loans, normally agriculture means normally we see that they are crops only. So they have been divided into short-term crop loans and long-term crop loans. So in case the loans are falling under short-term, so basically that is when the interest or installment remain overdue for 2 crop seasons. So we says if the interest or installment due remains overdue for 2 crop seasons, then it will be treated as NPA. For long term, it is overdue for 1 crop season. Because normally short-term crops take 6 months for the harvest and long-term crops take 1 year for the harvest. So basically both are 1 year time has been given for the agriculture loan. After, if that is still persisting the irregularity, then only it has to be treated as NPA. Okay, and these short-term and long-term crop loans, which are the short-term and which are the long-term and what is their period? How much is the period for short term? How much is the long term? They are decided by the particular state level banking committee, SLBC. So it may vary from the state to state. So crop season vary from the state to state and they are finalized by the state level banking committee. So the same classification is there. Banks has to classify the accounts of this crop loan as NPA if that interest charge or installment which is fixed in any quarter, a first installment or interest which is fixed there, it is not serviced within 90 days from the end of that quarter after taking into consider this overdue thing. Okay, so overdue thing is more important in case of loan. So here overdue will continue for 2 crop seasons. Here overdue will continue for 1 crop season. So this is the special amount. Okay, but in case of it is not an agricultural loan, it is simply a term loan, demand loan, then only that overdue concept will be applicable, and that too overdue means amount which is due to the bank, means you have fixed the EMI for those loans. So EMI contains both principal plus interest. So that amount becomes due. So amount due to the bank if not paid on or before the due date fixed by the bank. So for each EMI, you have fixed a date. So in the agreement, loan agreement, when it is signed by the borrower, he says that on such and such date, I will pay the EMI monthly. Say you have fixed date, say date of 9th. 9th of every month is the EMI date. So it's 9th of November is the EMI date which becomes due. So he is supposed to pay on or before 9th of November. So 1st of November to 9th of November, time has been given to make the payment. If it does not pay, so on 10th November, this becomes overdue. So that amount becomes overdue. That EMI, suppose 10,000 is the EMI. So EMI will become overdue from 10th November. So from 10th November, overdue has to be calculated for 90 days. Then on 91st day, if it is still not paid, then it becomes NPA. So that is the overdue concept. Overdue means amount which becomes due to the bank, and that is not paid on or before the due date fixed by the bank. So due date was fixed as 9th. So it is not paid within 9th or before that. So from 10th, it becomes overdue. Clear? Term loan status clear? Loan status is clear. There is no problem.
Yes, sir.
Okay. Now come to the out of order status. There is little bit of complication. So CCOD out of order status is there. We have completed the loan part. Now we'll see this out of order status. So what is this out of order status? So for CCOD running account, this out of order status is there. So first is if the outstanding balance means what is the loan balance as on date, which remains continuously in excess of the sanction limit or drawing power. So for all this CCOD account, there is always a sanction limit and there is a drawing power given to the borrower, and whichever is lower, that amount is allowed to the borrower to withdraw. So whether sanction limit or DP, whichever is lower. So normally sanction limit is always fixed. So say sanction limit is say 100. Rupees 100 is given as sanction limit. And these are working capital loan. So working capital loan means normally they are given for purchasing of raw material, etc. So stocks are to be purchased. The stock has been purchased and the amount of stock, whatever he is having, according to that, the bank will see that how much stock he has already purchased from this loan, this CC withdrawal, and whether his margin is also he is contributing or not. That means suppose he has purchased, say, his stock as on date is say 150. 100 rupees loan has been sanctioned to him. His stock as on date is 150 and bank has sanctioned this limit with a margin of say 25%. That means out of this 150, 25% has to be the contribution of the borrower. 75% will be bank's contribution. So 25% of this is how much? $37.50, right?
37.50.
37.50. So bank loan should be how much? 6250. Yes or no?
Yes, sir.
Yes. So that means, suppose 150 means margin has to be maintained by him 30-50, and 6250 should be the bank loan, because 100 rupees is this one. Am I correct?
So that 150 no, sir.
You take, what is the, it will be
112, sir. 112.50.
112, sir.
so double it. Sorry, I am deducting from 100. So 112.5. Okay. So here, margin is 3750 and loan can be given as 11250, but loan is 100. So here DP can be taken as 100 only, because it is more than that. Suppose instead of 150, suppose his balance is say 120. Now tell me what will be the margin and what will be the loan. The margin will be how much? 25% means margin will be
30.
30. So in such cases, loan is to be how much? 70 only?
90, sir.
90.
No, loan is 100, na?
Okay.
Loan is 100.
Okay, okay.
90 can be there, but loan is 100. So if it is exceeding, then loan is sanction limit can become DP. If 90 is there, but you can, how it can be 90? 30 has to be there. Maximum sanction limit cannot be exceeded. Sorry. You are right. Up to 90. You are right. So 90 is the amount of loan to be allowed and 30 is the margin. So here, instead of deep drawing power, instead of it being 100, it should be 90. Clear? I hope I am clear now.
Yes, sir.
So that means borrow is allowed, he in this second case, first case he can be allowed 100 because his limit is more. He has got more things, so 100 can be allowed. So in that case, 100 will be DP. But in case the stock is lesser, so according to that, margin becomes 30, and 90 is the loan. So here 100 cannot be allowed, 90 can be allowed. Okay. So that means every such things has got a sanction limit and DP. So there is a sanction limit, there is a DP. Whichever is lower, that has to be treated. Now, as per this, suppose both are same. Suppose sanction and DP is 100, but the loan balance or loan outstanding as any date is say 105. That means first condition, if say, if the outstanding balance remains continuously in excess of the sanction limit or drawing power. If the sanction limit or drawing power is 100, then if the loan account shows more than 100, that is 105, that is the starting point of irregularity. Or this is the starting point of out of order. So from this day, out of order starts. So you have to see which day it starts, and to 90 days you have to calculate that. Then on 91st day, if still continuing, this becomes NPA. Is it clear for the first clause? First case is clear. Then I will go to the second case.
Yes, sir.
Yes, sir.
Please
In
repeat.
certain cases, this sanction limit or DP is 100, but this loan outstanding might be less than 100 also or equal to 100. So it was either 100 or it was a 90 also outstanding. So it is within limit or below the limit. But thing is that during this 90 days, last 90 days period, though this loan outstanding is less than the sanction limit or DP, but there was no credit or not enough credit in the last 90 days. Last 90 days, there was not enough credit to cover the corresponding debits during the 90 days period. That means you have to see that on any date you take the 90 days period, and from that 90 days period you take the debits and credits in the account. So you take the total summation of 90 days debit and 90 days credit. Here it says that the total debit, suppose total debit comes to say 2050, and total credit should be minimum 2050 or more. If it is less, that means if it is 2049, that means 1 rupees is short. So within this 90 days period, this borrower has not paid this 2050. So that it will start that, what do you say, out of orders. It will be considered as out of order. Okay. That means for the 90 days, this has stayed for out of order. So on 91st day, it would be treated as NPA. Next is, during this period, there was no credit. Debits are there, 2050, there is no credit. So if there is no credit at all, or the credit totally which is received by the bank within 90 days is less than the total of my debit, then also these are the two conditions for which they will be treated as NPA. Okay. Now, third is a technical concern.
Excuse me, sir, one sec. Sir, this debit include only the interest debits or all other debits?
Entire debit, whatever debit and credits are there. So whatever he has withdrawn the principal, and he has to credit his process. Now all the debits appearing in the debit side, whether it's interest, charges, whatever it is there, they has to be total. So total of the debit means bank has allowed this much, and it includes interest and other charges. That is supposed to be paid by them. Since it is a running account, this total amount should be paid by them within 90 days period. So if 100 is the total debit, they should have paid 100 rupees. If it is 99 rupees also, they have not paid 1 rupees within this period. So this is to be turned NPA. All credit and debits appearing in the running account transaction. Not, you will not take only, you take all things. So normally, yes, even if the amount of outstanding is less than his sanction limit or DP, if the conditions are there. Okay, so that is the first condition. If the outstanding balance is less than his sanction limit or DP, and that total considers that the credits are not covering the total debit, it is a out of order situation which prevails for 90 days. And if it's no credit, then it is obvious. There is no problem. For no credit, there is no problem. But even if the credits are there, which is not equal to the amount of debits, then it is to be considered NPA. So you don't have to calculate, your system will calculate.
Excuse me,
that
sir.
one. That is it.
If he's utilizing, say, suppose 50 rupees, and the interest is charging every month is rupees 5. So it will take 10 months to cross 100 crore. 100 rupees. So what happens in this case, sir?
No, whether for 10 months he is not paying anything?
Yes. All debits.
Then it is
all debits are interest debits, and he's utilizing 50 rupees. Yes.
So what is the sanction limit?
100.
100. Suppose 100 is sanction. You are telling 100 is sanction and DP is also 100.
Yes.
DP is 100.
Yes, sir.
Okay. Okay. So you are telling he is utilizing 50 rupees. He's not
Yes. He has
utilizing his
utilized
full
the
amount.
50 rupees till
50 rupees,
31st of
his
March.
utilization every month is 50 rupees only. Okay.
Not, sir. Say, suppose he has utilized 50 rupees till 31st of March 2022. And further, he's not debiting his account. Only interest is debiting like 5 rupees per month.
So that means what?
Yes.
Sanction limit is 100. His outstanding balance is 50. Okay.
Yes.
Now interest is debited. Suppose interest for 5 rupees debited 1 month, 6 rupees next debited, and 7 rupees debited. So now what is the balance comes? Balance comes how much? 68.
Okay. Yes. 68.
These are the debits. What is the credit here? What is the credit? You tell me.
0.
This is 18 is the debit. What is the amount
Yes.
of credit? Credit is how much?
18.
Nil.
Of 18.
Nil credit. You are telling he is not operating anything. Nil credit.
Yes.
This is NPA only.
This is NPA on it. Okay. After
Second
90 days.
condition.
Second condition. Yes, sir.
You got my point?
Yes, sir. Thank you.
Either to make his account regular, he has to pay 18 rupees. Within 90
18
days,
rupees.
18 rupees should have been paid by him to make the account regular. If it is not paid 18, he has not paid anything, or he has paid 17 rupees also, this is NPA. That's why these
Thank you, sir.
conditions are there. I think your logic, you satisfied with this thing?
Yes, sir. Thank you, sir. Very much.
Pay something, it will be in the credit. If you do not pay, even if the amount outstanding is 10 rupees also, interest will be charged 3 rupees. If you not pay 3 rupees, it will become NPA. Okay.
Sir, one more doubt. Sir, person
sir.
taken
First, tell me, ask me.
person taken a personal loan, so 1 lakh. Monthly EMI is 10,000, sir. Suppose.
Okay, personal loan is there. Monthly EMI is how much?
10,000.
1 lakh. Okay.
Suppose he paid 5 months EMI.
Okay.
Then after 5.
You start from the date when he has not paid. What he has paid is different. When he started not paying, from that day you say.
But he is paid excess amount, sir.
Whatever it may be, excess amount, that is up to you. Why you have paid excess amount? Who told you? Condition is that you have to pay the EMI. You are telling EMI is 1 lakh, right?
Sir.
EMI is 1 lakh. So how much you are telling how much he has paid?
Sir, total amount 1 lakh, sir. Monthly EMI 10,000.
So you tell me the loan, you are telling, so loan amount is 1 lakh, EMI is say 10,000. Okay. Now tell me.
He paid 5 months EMI.
Okay, 10,000 he has paid. Okay.
Up to 5 months. Then what is the status, sir, up to 5 months?
I could not get it. If he is paying his EMI as 10,000, why there is a problem?
No, sir. He's not paying by every month. He's paid a total of 5 months EMI before 1 month, sir. Suppose he's taken a November 1st to 1 lakh loan, sir. December 1st,
when the loan was sanctioned, loan was sanctioned on
November 1st, sir.
Okay. November 1st, 2021, I will take. Okay. Now tell me. Okay. So, first installment is due on
December 1st, sir.
1st December. Okay. He has
on December 1st, he paid 5 months EMI, sir. So, for 50,000.
50,000 he has paid. That means he has paid 50,000 where this EMI is 10,000. Okay.
Yes, sir. Yes, sir.
So for 5 months he has paid service in advance.
Yes, sir. Yes, sir.
So 5 months means he has paid for December, January,
November.
February, March, and April.
Yes, sir.
Okay. So he has prepaid his installment. That
Yes, sir.
means all the interest and EMI for 5 months has been paid. Now
sir.
you tell me what is the status here. Because he has paid everything. So automatically interest which will be charged, you will see that after in the month of December end, whatever interest charge he has paid already, because 10,000 consider 10,000 includes that interest and principal also. So he has paid up to this. So now what is the status after this, say how whether he is paying or not? From that we will decide whether it will be a PA or NPA. Am I clear?
Yes, sir. Yes, yes. Okay,
So
okay,
if he has paid in advance, there is no problem. He has serviced the interest as well as so up to that period it cannot be NPA. Because this here, the credit debit is not in a concern. In the running account, only credit debit is a concern. There, this account is a term loan account. Term loan account, he has paid the interest. So you don't have to summation, giving summation debit credit is not a clause in the term loan or demand loan account. This is for the out of our status in a CCOD account. So that is different. This is different.
Okay, okay. Thank you.
So third condition is a technical condition where normally CCOD accounts are sanctioned for a period of 1 year. Every 1 year, after 1 year, the limit has to be renewed. After the borrower submits the papers, everything, it should be renewed. So basically, every year it is renewed. So if the renewal of the limit of CCOD is not done within 180 days from the date of renewal, then it will be considered as a out of her status, remained for 180 days. So on 81st day, it will turn NPA. So suppose date starts from 1st January. On 1st January, the loan has to be renewed, the CCOD to be renewed. So from this date, it will start. So this becomes out of order on 1st because renewal has not been done. So 6 months period, 180 days period is there within which account has to be renewed. If that period crosses even for 81st day, the limit has not been renewed, then it will be treated as NPA. Clear? So that is one condition. Second condition is that in CCOD, again, since these are given against the stocks, so borrower has to submit stock statements. Stock statements are to be submitted as per the terms and conditions. So if the borrower is not submitting stock statements as per the fixed date, so from that date, it becomes out of order. So that case, in stock statement case, the out of order status remains for 90 days and 91st date, it will become NPA. Okay, these are the condition for out of order status account.
Sir.
So situation will be given, so you can decide on which day it will become NPA.
Sir.
Now next we'll go. So all the principle which for classification of asset. Any question is there?
Yes, sir. So for any CC account, it is 180 days from the date of renewal, sir.
What is the account?
CC account, sir. Cash credit.
CC account. CC account. Yes.
Even it is for KCC also. It's 180 days.
Normally for KCC also it is also 180 days. If it is a running account, it is not a term loan. Running account always it is, so it might be the decision of SLBC whether they are treating for that as a 180 days or more. That is totally dependent on SLBC. Normally it is treated that all type of CC account, if it is CC or OD account, for them the renewal of the thing should be done after 1 year period. So these accounts are valid for 1 year only. There is no
days.
special thing.
180 days. You said 6 months, no, sir?
I said that sanction is valid for 1 year only. After
Okay.
the sanction expires, that renewal of
The-
sanctions to be done on 180 days. That's I told.
Okay.
Every
Okay,
sanction is up to 1 year period. The
sir.
working capital are sanctioned for a period of 1 year. After the expiry of 1 year, within 6 months period or 180 days, RBI says 180 days, this has to be renewed. If it is not renewed in this period, on 181st day, it becomes a NPA.
Out of order. Okay, sir.
Even if not out of order. This is the out of order period already. 180 days is the out of order period. This is the out
Okay.
of order already started from first day out of order.
Sir.
So out of order remains for 180 days. 181st day it becomes NPA.
Okay, sir.
Now, principle of classification asset into NPA. First, we know that this age of irregularity. So it is 90 days or 180 days or season, crop season. So they are according to the age of irregularity. Second is any loan account, any fraud happens. Whether it is regular, irregular, that doesn't matter. Any fraud is detected in any of the loan account, it becomes a NPA account. And straight away, fraud accounts are to be treated as doubtful category account. Even they are not going to substandard category, straight away promotion to doubtful category. A fraud is detected. It might be a regular account also. Then erosion of security which is available. So in this case, two things has to be done. Erosion of security value means suppose 100 rupees loan has been given or 100 rupees your loan or advances, whatever is given. So banks obtain security. So basically security which is available, say it is 200. So this is the collateral security available. That means it is fully secured. There is no problem. So these conditions I tell you irrespective of regularity or irregularity in the account. Suppose this 100 rupees loan, this security value has you have obtained 200, but now today this you have obtained as 5 years back, running is everything okay. Now collateral value has depreciated. Such securities are there where depreciation has happened, or if you are going to sell this collateral value, the market value has come down to say 50%. So there is a 50% depreciation of the collateral. That means it has come down to 100 now. Okay, so 50% has been depreciated, so it is coming to 100. That means the security value has eroded by 50% or more. 50% or more when it is depreciation is done. So this will be treated as doubtful asset. If the security still erodes and becomes 90% or more, that means 90% is if it becomes 15. From 200, it has become 17 or 15. 90% is 18. So less than 18 is 90% erosion has happened. So only 10% is available here. So less than 20 is there. So it becomes loss asset. So remember, so if the erosion of security is equal to or then more than 50% up to 90%, so it is doubtful. If it is equal to or more than 90%, then it becomes loss. Okay? And all this treatment of asset classification are record of can be done through a record of recovery in the account. Means that credit debit summation I told you or payment of installment. So what is the recovery in the account? Whether the installment and principal has been paid by the borrower or not. According to that, classification is done. Then sometimes restructuring status has to be also considered. So normally some of the accounts are restructuring of the account. So restructured account are done to save the account from NPA only once on genuine conditions, not for just to save the account, you can restructure. No. When there is a genuine condition that borrower is facing some problem, they are not able to pay, in that case only loan account can be restructured. So that restructure can be done once only. So only once you can save it from NPA. Second time that restructure cannot be done. So according to that, it becomes a NPA. Third view is auditor's viewpoint. Auditor is the final thing. He will classify. If he says that he will look into the RBI circular and he can classify according to the above category, and his view is the final view. Okay. Now we'll go to the income recognition. As I told you earlier, I told you that that example I have given you, that December 31st interest charge, say 100 rupees. January 31st interest is charged, say 105 rupees. 28th February interest is charged, say 108 rupees or 109 rupees. Then March 31st March, suppose interest will be charged, say 120 rupees, suppose. So now you see this interest of 100 rupees, we have calculated it that it should be paid on or before 31st March. So now on 31st March, 120 has not been applied. So on 31st March, today is 31st March. So 100 rupees is supposed to be paid within this 31st March. If it is paid, then fine. If it is not paid, on 1st April, the account becomes NPA. So 1st April means also you have charged 120 rupees. So this interest, 4 interest has been applied to your account. So you have debited the loan account and credited all interest to your P&L. So you have credited 100, 105, 109, 120. So that total becomes how much?
434.
434. So 434, your loan account, loan or advances, your loan account have been debited and you have credited to your P&L 434. Now he has not paid this 100 rupees and on 1st April it has become NPA. So it says that all 434 rupees what we have credited to P&L according to this 4 interest is applicable into the account, or you have applied, your system is applied, entire that thing has to be debited 434 and it has to be credited back to the loan account. So now suppose the balance before this was say 20,340. And after interest, whatever the things is come, so it has become 20,774 because 434 is the interest applied. So on this March balance, it will be 20,774. But that 434 has not been realized. So when you credit it back on these dates, the balance will be again coming back to 20,340. This 340 is there. Okay. So all these interests which are charged in between, they have to be totally reversed. These are not recognized as income. So that process is called a reversal of the interest. The reversal of interest which are not realized by the bank and for which the account has turned NPA. Okay. But in this thing will not be applicable for loans which are given under the security of bank FD or NSC or Kisan Vikas Patra or life insurance policy or Indira Vikas Patra, whatever is there. So for them, this rule is not applicable. For here it says that as long as for this type of loan, normally these are the demand loans. So as long as the margin is sufficient, margin is available. Sufficient margin is available. Those loans should not be turned to NPA only for the fact that 3 months interest has not been recovered. That is the exclusion for this type of account. Okay. So basically, this is the process I told you any day. Then another thing, the treatment of classification is borrower wise, not facility wise. Again, this is simple thing. Suppose Mr. X is a borrower. He has taken 3 loans from your bank. So this is your bank. This is your bank. He has taken 3 loans. One housing loan, one business loan where he's maintaining current CC account, and another personal loan also taken. So now this personal loan has turned NPA. So some irregularity happened and bank has specified this is NPA. These two are running fine. They are still standard in nature. Now, as per this rule, it says that classification of borrower's account will be treated as NPA as borrower wise, not facility wise. So borrower wise means borrower is 1. Facility wise means facilities are 3 facilities. If it is facilities wise, then only one loan can be treated as NPA. They will be treated as standard. But it says it has to be treated borrower wise. Means if one loan of a borrower becomes NPA, all other loans of the borrower in the same bank will be also treated as NPA. So all will be treated as NPA. Clear? Any doubt on this? So this is what the borrower wise, not facility wise. Okay, for all the loans will be treated as NPA only. Now, this already I have told you. This is also already discussed. Now, under consortium. Okay, consortium, actually, if this is consortium means normally one borrower is there, say Reliance Industries is the big borrower, and it has been, the loan has been provided by say 4 banks. The State Bank of India, Andhra Bank, or any bank, which is a Union Bank of India, Bank of India, and HDFC Bank. All these 4 banks together, they have come to a conclusion that they will be providing, say 50,000 crore is the advance they have given for together. It is under consortium. So SBI is the consortium leader. So here the consortium basis, loan has been given by the 4 banks together. Now in such cases, if the loan of Bank of India turns NPA, here that rule borrower wise not applicable since there are 4 different banks. So here the consortium loan says that the individual member will treat the account of the borrower as APA or NPA according to the record of recovery. So according to record of recovery, SBI's loan is okay, standard. UBI loan is also standard. HDFC loan is standard. But Bank of India recovery is not there, so it is NPA. So Bank of India only will categorize as NPA. All 3 loans will be continuing as standard. This is as per the loan under consortium. Okay. Now, loan with moratorium for payment or interest. Simple the cases, some of the cases moratorium of the moratorium is sanctioned. Moratorium. That means that is a holiday period. These are called holiday period, within which the borrower has a condition that he will not repayment will not start within this holiday period. That means he has been given a holiday period of say 1 year. for any professional loan or any, say, business loan or housing loan, whatever it may be, moratorium can be sanctioned by the bank. So the entire picture of classification of NPA will start after the moratorium expires. Within moratorium, no loan is to be treated as NPA. Because this moratorium period says that you are not supposed to serve interest or principal at all. So after this period is over only, we will start viewing the account as a normal account. Moratorium has been completed. So that out of order or say overdues will be starting from expiry of moratorium period only. Okay. So this asset classifications are done as per this. I have told you. First, it is standard asset that is performing. When there is irregularity, we are converting it to substandard. So in substandard asset, the loan will remain for NPA will be remaining for a period of 12 months only. Automatically after 12 months, it will be transformed to doubtful asset. When doubtful asset, there are three categories again: doubtful 1, doubtful 2, and doubtful 3. So in doubtful 1, up to 1 year it will stay in doubtful 1. Doubtful 2, it will stay another 2 years. So more than 1 year up to 2 years. So here 1 year, here 2 years. So after 3 years, in doubtful, it will become doubtful 3. And there is no time limit here. No time limit here. It can stay longer period. There is no expiry of time after which it become a loss. No, there is nothing like that. So you can say that here 1 year, 1 year plus here 1 year, second 2 year, here 2 year, 4 year. After 4 year, a loan becomes doubtful 3. Now, why this loss asset? So loss asset will be treated if the entire recovery measures have been failed by the bank. Bank says that there is no further recovery happening and the security available in the bank is either 0% or it is less than 10%. Security which is available, it is less than 10% or no security available, and all the measures of the recovery has failed, then it will be treated as loss account. Okay? Is it clear? I will tell you what is the difference between substandard. As I told you that these are classified according to the time and amount of provision to be carried out. What is the amount percentage of provision for standard substandard asset? I will tell everything. For even for standard also you have to make provision. So normally when it becomes doubtful, provision amount will go up. So you have to provide for more amount. So gradually it will go up till doubtful 3. I'll let you know what is the difference between these two. So this chart shows you, first this blue chart shows you the standard asset provision. Standard asset provisions are like this. For agriculture SME loans, this is 0.25%. These all provisions amount are on the outstanding loan amount only. As on date, what is the outstanding loan amount? On that, you have to make provision. Normally, on the 31st of March, this thing has to be calculated. For agriculture SME, it is 0.25%. For commercial real estate, it is 1%. For real estate housing, residential, it is 0.75%. For restructured loan, it is 5%. And for other loan, except these things, it is 0.40%. This is for standard. You have to remember this thing. Okay. But we are concerned about the NPA. So NPA accounts are like this. Substandard. Substandard is to be So basically for NPA account, again, the provisions are divided according to the what is the amount of security you are having. So they are divided into secured portion and unsecured portion. So that is a one secured person, unsecured person. That means suppose 100 rupees loan has been given. And suppose security available is say 75. That means for this loan, 75 rupees is secured and 25 rupees unsecured. Is it okay? So if it is, suppose instead of 75, suppose security available is 150. That means it is fully secured. This is fully secured. There is no unsecured amount. So security available, if it is less than the loan amount, then it should be divided into how much it is secured and how much it is unsecured. Okay, according to that, provision is to be calculated. So in case of substandard, for secured person 15% and unsecured is 25%. But if a loan is infrastructure loan, which is turned to substandard, in such infrastructure loan, escrow account is also available. In such cases, only for unsecured person, it is 20%. And in substandard account, there is a special thing you should see. I will mention about that 15, 20%, 28%, how to be calculated after I explain this doubtful one. So for doubtful, the percentage are 25% for the secured, 100 is for unsecured. Doubtful 2 category, for secured person, 40% provision, 100 is the unsecured. So unsecured person becomes 100 for all the things after substandard. And doubtful 3, secured 100 also, unsecured 100 also. Same thing for loss asset. Okay, so this is the provision. Only thing, what is the difference between doubtful and loss asset is there. I have told you that here all recovery measures have been exhausted by the bank and security available in loss asset is less than 10%. That's why they are loss asset, they need to be written up. So write-off has to be done for loss. Once it becomes loss, as soon as possible, entire amount has to be written off by the bank. But if the security is available more than 10%, then there is a chance of recovery in this account. So that can be kept in the doubtful 3 for a longer period. So unless the security becomes less than that, that account will not become losses. Okay, so these are the provisions. Now for substandard, just one important thing you should remember that for general provision is 15% for the total amount, and if it is that is unsecured, it will be 25%. I mean extra 10% has to be there. Here, without making any adjustment of any ECGC or any claim, ECGC guarantee cover is there, that has not to be considered here. And security available. So general 15% is applicable on total outstanding without making any ECGC cover is there if it is export account and if at all any security available. Now question is when this unsecured has to be considered. So unsecured will be considered for a substandard account where this 25 provision will be to be made. In such, unsecured is defined as the exposure where the realizable value of the security, whatever the security is available in substandard, the realizable value of the security assessed by the bank or the Reserve Bank inspecting officer is not more than 10% 10% of the value of security ab initio. Means from the beginning, the security value is not more than 10%. In such cases, that will be treated as unsecured. Otherwise, only you have to take the provision 15%. If the question says that substandard category where the value of security available substandard only substandard value of security available say 100 and outstanding is 200. In that case, you have to take only that 15% on the total value. But if it is written that substandard value of security ab initio, then they will give that 200 is the loan balance where the security available is 150 and 50. Or it is, say, it might be 50, 150. So in this case, from ab initio, if it is taken, then only you have to take that 15% and 25% provisioning. Otherwise, it will be taken as fully secured account. That is the only difference. Okay. Now we'll go to the sometimes special provision norms allowed for any account where the CGTMSC cover or any of other covers. Like
Sir, one doubt, sir. When we are talking about security, that is collateral security, even primary security is available also, that also can be considered.
Yes. Security means collateral, primary security. What you have, you can sell it and you get the amount for the process, adjustment of the loan.
Okay.
But always remember, in such cases, the third party guarantee is a security, but that has got no value. That should not be taken into account. Third party guarantee has got no value in this provisioning norms. Only primary security and the collateral security, which has got monetary value, when you sell it, money will be coming. Third party guarantees are not considered. Only the guarantees given by government agencies are to be considered. So wherever you have any loan which are covered through CGTMSC or CRG, FTLIH or any of the other 2 or 3 guarantees, government agencies are there, they are guarantees this loan. So in such cases, the guaranteed portion will be excluded from provisioning. So that much of amount will not be considered for guarantee the provisioning, because that is the fully secured person. You are going to get back from the government agency. So no provisioning is required on that. Simple example I'll give. Suppose 10 lakh is the amount of outstanding loan. Now it is covered to CGTMSC. So CGTMSC says that they will give you, if it becomes NPA after the eligibility period, they will give you either 75% of the amount, or second is 75% of unsecured amount, or third is 3750 lakh, whichever is less. This is their condition. So this condition is applicable for CGT, the loans where CGTMSC cover is there more than 5 lakh. So this account is more than 5 lakh. So this condition is applicable. So that means how much is applicable for 10 lakh? 10 lakh, what is the claim applicable?
7.5.
25.
Hmm?
7.5.
How 7.5? 3 conditions are there. That's why I asked. Condition 1 is 75% amount. Condition 2 is 75% of unsecured amount. Condition 3 is 3750 lakh. So now we have to see 75% is 7.5 lakh you are telling. Second condition is what? Third condition 3750. What is the second condition? What is the unsecured amount? That 70%. So here, this is the loan amount where security available is how much? 150. So this 150 is the security available. This is the secured person. So how much becomes unsecured?
8.50.
850, 75%, how much? 638?
638, sir.
So 638 is the claim which is eligible, not 750 or not 3750, whichever is lower. So 638 is available. So 630 out of the unsecured, 630 will be the CGTMC cover. So on this, no provision is applicable, as this will be treated as fully secured. So how much is unsecured now becomes 212. So we have deducted from total unsecured with the cover of CGTMC. So now this becomes our unsecured exposure. Okay. So this is a doubtful account for more than 2 years. So provision is, how much provision for this? For secured person,
100%.
doubtful 2 is 40% and this is 100%. So how much it is? 0.60 plus 2.12. So provision required is 2.72. Clear? Okay, can I go to the next slide?
Not clear, sir.
Okay. So now sometimes question will be asked to find out these 4 things. One is gross NPA, another is gross NPA percentage, next is net NPA, last one is net NPA percentage. So you have to find out. Gross NPA is simple. It is the total amount of NPA as on the date of that bank. What is the total NPA? All accounts, what standard account is there, NPA account is there. So total, suppose total of the advance is say 1 lakh rupees, out of which 1 lakh rupees, out of which standard is say 73,000 rupees standard, and how much is remaining is NPA. So this is NPA. NPA is how much? 27,000. So this is the NPA, this is the standard account, this is the total advance. That means NPA is 27,000. So this is the gross NPA or total NPA. So gross NPA, total NPA, you understood, there is no problem. Okay, so it is the total NPA. Now, what is the gross NPA percentage? So this percentage is how much is the NPA percentage to total advance. So you can say total NPA 27,000 divided by 1 lakh into 100. So how much it becomes? 27%. So gross NPA percentage is calculated as total NPA amount divided by total advance account into 100. Total NPA amount divided by total advance amount into 100. So what is the percentage of NPA to total advance? That is gross NPA. Okay. Now, net NPA, normally it is to, here I have written that from total NPA, you have to deduct total provision only. But apart from this deduction, there are other deductions are also available. That I will tell you first. So, to arrive at net NPA, we have to find what is our, from gross NPA, some deductions have to be made. Deductions has to be made to find out net NPA. Those deductions I will tell. And to find out net NPA percentage, we have to also find out, apart from net NPA, we have to find out what is the net advance also. Here total advance is not applicable. Net advance has to be applied. So what are these deductions? First deduction is your provision made for NPA. So what is the provision made for NPA which is held by the bank? What is the provision amount for NPA you have? That is one thing. Second thing, sometimes it might be asked this question. Normally they don't ask, but 1 or 2 years they have asked this question. So you should remember what is the deductions to arrive at net NPA from gross NPA. So any subsidy amount which has been received by the bank on account of a loan account which has turned NPA, but this subsidy amount is not yet adjusted to the loan account. It is kept in a separate nominal account or suspense account, whatever it is still kept. It is yet to be adjusted towards the loan account. So in such cases, that has to be deducted. This will be deduction. Similarly, any claim which has been received by the bank, either from ECGC, CGTMSC, or any other government agency, which is still pending and they are kept in a nominal or subsist account, they have not been adjusted to the loan account yet. Or fourth one, after it became NPA, there has been some part payment or part recovery from the borrower's account has been done, but those amount is yet to be adjusted into the loan account, and they are kept in the nominal or suspense account. So they are supposed to be adjusted. So they are not yet adjusted. If such four things are there, they have to be deducted from gross NPA to arrive at net NPA. Same thing is applicable from total advance. These deductions has to be made. So total advance less these deductions. If four things are available, you deduct all these things, you get net advance. So net NPA, you understood, gross NPA minus this deduction, whichever is applicable, whichever is available to you.
Excuse me, sir, what's the fourth point, sir? What is the fourth point to be excluded, sir?
Amount which is amount of part payment or any recovery from the borrower which is received by the bank towards the settlement of the loan, but those are still not adjusted to the loan account. It is kept in a separate account.
Okay, sir. Thank you.
Okay. So net NPA means gross NPA or total NPA minus these deductions. You get a net NPA. Similarly, net advance means total advance minus these deductions. You get net advance. So when you have to calculate net advance percentage, at that time, it will be net NPA divided by net advance into 100. This formula, gross NPA is gross NPA divided total advance into 100. Net NPA percentage. This is net NPA percentage equal to net NPA divided by net advance into 100. Okay. So is it clear? Now you do this exercise so that is possible. So total advance is 1 lakh. Total NPA is 8,700. Provision on NPA is 3,300. Find out the gross NPA percentage and net NPA percentage. You tell me, calculate and tell me by applying these formulas. What is the first gross NPA? How much? Gross NPA percentage, how much? And net NPA percentage, how much? So 8.7, Krishna Priya, 8.7 is your gross NPA. Anybody confirming this?
Yes, sir. 8.7.
Yes, sir. 8.7 gross.
Okay, fine. Then what about this the net NPA? How much? This is 8,700 divided by 1 lakh into 100. So you are getting 8.7. Now net NPA. Vasala, how it is 5.4?
Sir, 5,400.
No, Krishna Priya is 5.58. That is the correct. How it is 5.4?
5.58, sir.
5.54 means you are actually not deducting that provision from the loan amount, I think. Gross advance or total advance also you have to deduct. Okay. So 5.58 is the correct answer because net NPA is how much? Net NPA is how much? 8,700 minus
3,300.
3,300. So that is 5,400.
400.
Minus divided by 1,000 minus 3,300. So that becomes
1 lakh, sir.
96,000. Why 1 lakh? Oh, 1 lakh minus 3,300. So it becomes
97,700. 96,700.
96,700. So into 100. So it will become 5.58. Okay. So don't forget to deduct that from the net, your total advance. If you divide it by the 1 lakh, it becomes 5.4%. So that is not correct. It should be also divided by net advance. Okay. So last thing is we should, today's last thing, last class, we'll end this here. There is a thing called provisioning coverage ratio. Also, sometimes it is asked that what is the provisioning coverage ratio? It is simple. What is the provision coverage ratio? It has been introduced by RBI from September 2010. That minimum provision coverage ratio has to be maintained by the bank at a rate of 70%. So this is what ratio? Amount of NPA provision. Amount of NPA provision to the total NPA into 100. What is the amount of provision you are keeping against the total NPA? So earlier question, NPA figure was 8,700 and your provision was 3,300. Can you tell me what is your provision coverage ratio for this? First, what is the provision coverage ratio? If the
37.9.
37.9. So 37.93 is the percentage, but RBI requirement is how much? RBI says how much to keep? Provision ratio it should be 70% minimum. So RBI has given a time, from September 10 it was given, 2 years time was given for the bank to achieve this. So every bank achieves this 70%. So total provision should be at 70% level of your total NPA. The idea is that banks should build up provisioning and the capital buffers in case of risk management, we told, both should be always saved thing to be provided for, or to make a savings like you are making a RD, so that when the profits are good, you are making this. So at the time of crisis, your P&L will not be hit for that. So observing the loss will be accommodated through this provision or through the capital when there is a downturn. So this amount of provision or building the capital as per the risk management and balance sheet management, they will enhance the soundness and safety of the individual banks. And also, if every bank keeps this capital as well as this provision coverage ratio intact, then there will be a stability in the financial sector. So it was decided by RBI that the banks should always augment their provisioning cushion, consisting of the special provisions against specific provision against the NPA, as well as any other floating provision they want to make, so that they will keep their provisioning coverage ratio at 70% level. Okay, so this is what the entire thing about this provision cover entire. We have completed the module D. So now you can ask me if there is any question is there, you can ask me. Otherwise, the thing is over. We'll meet on 20th for doing numericals. So on today's topic, any confusion, anything is there, you can ask me.
So the substandard explanation that you were giving, that ECGC cover is not to be taken. So can you please explain that?
So that is, I have told you that in case of substandard, 15% of the provision to be done if account is a substandard where it has not been declared by the bank that security available is not more than 10% ab initio. It has not been declared. In such cases, only this 15% provision is applicable without taking into consideration any ECGC coverage or any security available. You have to not deduct these things, whatever the outstanding amount is there. Suppose outstanding is 80 rupees. Low NPA outstanding is 80 rupees, and say the security available is more than 10%, say 70 rupees security available. So you do not, and ECC cover is also available. So you do not have to account for ECC cover or security available. Do not deduct these things. So what is the amount of provision? Provision of amount is 15% to be applicable on the 80. So 15% of 80 is how much? So 12 rupees will be the provision for this substandard account. Okay?
Okay, sir. Okay, sir.
If there is a condition given, there is an unsecured amount which is ab initio. From the beginning, it has been decided, agreed that this is the security value which is less than 10%. In such cases, that 15% and 25% will be taken into consideration. Here only your division of that thing will be there. So security available will be deducted, or ECC cover not to be taken into account. Security available has to be divided into that. So this is the secured person, this is unsecured person.
Done, sir. Done, sir.
Okay. Anybody else? Any other question?
Sir.
Sir, in the multi-banking arrangement, how the NPA classification?
You have anything to ask?